We particularly like out-of-favor sectors and groups. We think the dollar has actually run quite a bit. And one of the things that we look for in terms of the dollar is the weekly commitments of traders report from the CFTC. And what they're showing right now is something that they show frequently before major corrections, and that is the commercials have been aggressive net sellers of the US dollar futures for the last few months. And that usually precedes some weakness in the dollar, which is paramount for the emerging markets to take off. As a matter of fact, if you look at the emerging markets over the last 30, 40 years, the performance of emerging markets relative to the S&P 500 is the lowest since it's been since the 2001 to 2002 period. And shortly thereafter, it had a 390% run over the next 4 or 5 years. We think that the situation is setting up where emerging markets, if you look 3 to 5 years out, from a demographic standpoint, from a policy standpoint, and potentially from a weakening of the dollar, that's going to be your key trigger. As you see the dollar weaken, if it takes 6 months, if it takes 12 months, that's when emerging market flows are really going to kick off. And China is now 33.5% of the emerging markets weighting. It's being moved up to 33.8 at the end of this month.